Good morning. It's May the 15th, 2017. Time to recap the overnight markets and take a look at our trading today. We'll start with our usual disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, the stock market is up. We're going to start with the treasuries, and the stock market is up because Saudi Arabia and Russia have agreed to roll over the current production quotas until the end of the first quarter of 2018. If the OPEC membership adheres to that deal, it is supportive for oil prices. It is supportive for the energy sector. It should take equities higher, and that's why we're having a little trouble with treasuries today. So really, given today's news, my guess is that it's down to the direction of the E-mini. We have the Empire State Manufacturing Survey that's called up 7, and we have housing market index at 68. That's the only news we have on tap for today. So these two pieces of news, which normally don't have a lot of impact, could today. But I think the biggest news for the stock market is the proposed rollover of the current OPEC quotas, and on paper they'll get them. That won't change. And OPEC, if they can't get a new deal, they keep the old deal. It's the way they vote. They don't want to go through and rehash it, and then it's back to business as usual. So we have resistance starting at 20 to 24. First sell is 19 to 23. 27 to 31. On the buy side, 9 to 13. And then 1 to 5. I'm guessing trading range today, driven by the direction of the stock market. Hope everybody had a good weekend here. I played with the puppies and cleaned up some messes, and didn't do a heck of a lot. Basically took the weekend off. Got several naps, trying to recover from whatever bug I have had that's been bugging me. But I do feel better. Looking at the 30-year, spreads come in 1 or 2 ticks, so the market's just kind of waiting to see what happens with equities today. So we're dealing with, volume-wise, B right here. We did get stops above Friday's highs. You can see volume-wise right there that the volume is going to the downside, and this is definitely a B with volume low in that one. So it looks like it's set up to sell. So the first support is 4 to 8. Buy 1's 29 to 01. Buy 2 is 17 to 21. On the resistance side, 17, and we got this high at 13, and we're at 11. So we'll make 12 to 16, number 1. 19 to 23, sell 1. 27.31, sell 2. There was an interesting article on Zero Hedge talking about that the big play right now, because the VIX has gotten so low, there's no juice in it, is the specs are rolling into treasuries on the long side, and that's probably the most negative article I've seen on, for support for the bond market. If the specs are on the announced side of rolling into on the long, the professional element of the market will see that, and they think interest rates are going higher. They've got more staying power, more buying power than the specs do. But there's another element. The short-term hot money is going in long on the bonds, and I mean that could rally. Just don't get me wrong, but if the whole world knows that, that's generally not a a supportive thing because of the buying power of the large institutions and the rest of it, and they're the ones that will set the direction of the market. Okay, looking at gold. Gold hung in there, is a little bit higher. No specific news to tie to it. Crude oil prices higher, maybe the return of inflation. I know inflation has come back, at least PPI-wise, is higher than forecast for the United States. And I know in Europe that they regularly beat their desired inflation levels, so could be inflation. A 34.36 sell 1, 39.41 sell 2. It is a P. It is going to try to trade higher. We're going to see what happens when we come into this area right here. Stops above that high right there, which would take us to 37. On the buy side, we got this high volume number down here at 28, so 29 to 31 buy 1, 25, 27 buy 2. The euro rallied strongly. It started in Frankfurt. Got the jump on London. We're up, so stops above 110. First sell is 110, plus or minus. Then 1025, sell 2, and that's where the low volume area is, 1035 to 1022. This is the low volume area, so that's the stopper. On the support side, we've got a single print right here, so 975 buy 1, 950 buy 2. So I think it's a play for stops above 110, and after that, don't know. Crude oil is up $1.50. And what did OPEC do, and when was it done? It was done over the weekend. So if the market looks like it's headed lower, if you don't have the ability to deliver in, going home short on Friday afternoon is a dangerous play in crude oil. And that's because OPEC, generally speaking, if they're going to jawbone or try to support the market, they'll do it over the weekend. And rolling over the quota has been talked about. Now Russia and Saudi Arabia have formally agreed to roll it over, and market rallies $1.50. So 49.50, 75 sell 1, stops above 50s, which I think it probably is the better trade. Would be sell 2 on the buy side. 48.75, 49. Caught a lot of people short. Then the breakout came from 48.25, so 48.25, 48.50 buy 2. The news is supportive. And if it's amazing that the swing producer, which has always been Saudi Arabia, who really drove oil prices for the last 30 plus years, the swing producer now is the United States, and what they do with their shut-in, just-in-time inventory, horizontal drilling programs, sets or determines the price of crude oil. That's a heck of a switch if you think about it, where OPEC can no longer hold the world hostage to their oil prices. It's to the United States. That's a good thing. Okay, the energy sector I think is about 8 or 9% of the S&P 500 now. When Obama took over, it was about 13%. So the importance of the energy sector has diminished, but what happened to the price of crude for the energy sector, including service companies, is good, and it is supportive. So, can we get through 23.95 or not? The manufacturing survey number usually doesn't have a lot of impact, but this is the only news that we have today. So 94.96, sell 1. 99.01, sell 2. I'm guessing that we still have resistance at 95 to the buck. I see this announcement by OPEC is supportive, but not breakout type news. I think they're waiting for Trump taxes. But I think the bias is to the upside. So 85.87 by 1, 80.82 by 2, selling basically 95 to the buck. And that's it for the pre-brief. It's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.